Hello, my name is Rob Reinhold with Maverick Trading, and welcome to our Levered ETF series. In this video, we're going to be talking about the symbol LABD, which is a 3x inverse return of the S&P Biotech sector. Before we jump into that ETF, we have to cover just some basics here of what exactly is an ETF, so those of you that don't know it will understand the rest of it. Whenever you hear the term the stock market, that really doesn't mean anything. Look, there's several different exchanges where stocks are bought and sold on a daily basis and they go up and down. There's really no way to say, hey, how are all the stocks doing? And so they created these things called indexes that you could actually track what the market was doing, like the Dow Jones Industrial Average, the Standard & Poor's 500, the Russell 2000. And they created these as a way for someone to look at this number and say, oh, the market went up today, the market went down today, but it was just a collection of those 500 stocks that they put in there. In 1993, a firm called State Street created the first exchange-traded fund called the SPY, or as was called the Spiders. This was developed to deliver the same return as the S&P 500 index. The great thing about these is that it was a stock. It wasn't a mutual fund. It wasn't index. It could be directly bought and sold like a stock at any time at a really cheap price. This was a great alternative to mutual funds. Before ETFs, if you wanted to get the same return as the market, you had to pay a company probably somewhere around 0.5% or 1% to run the money to try to get you the same return. Now it's as easy as just buying SPY. And these have options, which is awesome. We're an options trading firm at Maverick, so we absolutely love options on these ETFs. This here is the S&P Biotechnology Index. Again, this is an index. This isn't a stock. You can't buy or sell this. This is simply an index that people use to track the movements of a basket of stocks. The ticker symbol for this is SPSIBI is the ticker symbol. Now you can do some research and see what the largest positions are, but basically they've gone and said, hey, here's a big collection of biotech stocks that we put in our basket. Since we can't trade these, we need to go find an ETF symbol. So if we take that SPSIBI index, we say, you know what, we want to trade this. Remember, you can't trade the index, so we're going to have to find an ETF for it. So we take out our multiplier and we say, okay, we want to times this index by -3. And if you do that, you're going to get the ticker symbol LABD. This here is the LABD. Now, Direxion runs this ETF. And this ETF is designed to give you the inverse return times 3 of that biotech index. The way they do that, they don't buy the shares, they buy derivatives, they buy options, futures. Yes, they could buy some shares, but really they're trying to match the return of the index. It's the same thing. Here's a look at them side by side. So on the left, you've got the biotech index. On the right, you have the 3 times inverse ETF. Let's see how they move together. So you can see when one is going up, the other is going down. Exactly what it's supposed to do is get the inverse return of the index. So this is going to be a way for you to trade short biotech stocks by being long. Fantastic usage in an IRA. And that's what it's all about, is that you can finally go short and hedge biotech positions in your IRAs. Before this, there was no way, because in most IRA accounts, there is no going short and there is no options trading. Because of that, you basically are long only. Let's talk about how and when to trade these safely. One of the greatest usages of these levered inverse ETFs is for short-term trading. Now, that could be a day trade. It could be a swing trade that lasts anywhere from 2 to 10 days. It's a great vehicle. Let's take a look at a trade possibility on the LABD. Let's take an example of using the LABD as a short-term trading vehicle. I'm going to be doing this exercise as a day trade, so I'm going to go to a 1-hour chart, and I will be using the bar replay feature. If you're not familiar with the bar replay feature, it's basically a feature that allows you to go to any point in a chart and rewind and play it. So what I like to do to just randomly just go and just string back in time and just say, you know what, this is the moment. So what it does, it goes to that moment and it now gives you the ability to play the price action. So here we are, LABD. It is in a downtrend. Sorry, shouldn't say downtrend. It's breaking down out of an uptrend. So again, what this means is that the biotech sector had been going down lately, and we just see this bounce here. Let's see what happens. And we want to see a good trading setup. We want to see a clear trend. Right now, we have moving averages. One's going up, one's going down. It is not a clear trend at all. So I want to wait until I get a clear trend. Okay, now we're starting to see something maybe a little bit more clear. As you can see, we now have a 20 crossing below the 50. But the problem is the 50 is still rising. This is sending conflicting signals, and we don't like conflicting signals. We want to wait until everything lines up. Let's wait until we get a clear movement on these moving averages, where this thing is going. It just doesn't look like it's tradable at the moment. We want to see both moving averages moving together strongly in a certain direction. And we are not seeing that yet until, okay, we're getting close here. We now have a 20 that's crossed above the 50. I need to see that 50 cross higher and start to steepen. Will it steepen? We don't know. Again, you have no idea what's going to happen. But I need that 50 to start to steepen up. Okay. Now this for me is kind of the first point where I say, hey, you know what? I'm starting to see this 50 moving average steepen. The 20 is looking great. So at this point, I'm just looking for a trading setup. Now we just had a run here and a pullback. We just had a run to a new swing high. So I'm looking at this saying, okay, this pullback could still take us down to this 47 area. And if it bounces there, I'm looking to take a long there. Let's see what happens there. It did not bounce there. So now it's like, okay, well, our trade setup that we thought was going to happen didn't. So you just say, I'm waiting for a better opportunity. Let's see if we can find an opportunity here. Now remember, you only want to buy the LABD. If you want to short it, just buy the LABU. It's the opposite ETF. As you can see here, we're getting now some bearish price action. Now we have a 20-period moving average that's sloping downward, but again, that 50 is still sloping. I want to see a clear trend. As traders, we have to wait and be patient for the best opportunities. We can't just be firing off trades left and right. We have to wait for good moments. Okay, we're now starting to get some really good steepening again. We have that 20 is now steepened up. We've got this rising 50. To me, this is, again, looking for a potential entry point. We are now seeing a start of a high base. It has run up and is now trading sideways. I'm going to be buying, and the great thing is you can put an order out there. You can put out a buy stop order out there that just sits there and waits for it. So let's say buy stop at 53. That's going to be the price here. Let's see if it breaks this. Again, we don't know what's going to happen. This is a perfect pattern. This high base pattern looks really good. And then you see it broke down. So we don't take the trade either. Let's see if we can find an actual trade here on this one. The great thing is when you trade properly, there's going to be a lot of trades you never take because it didn't trigger your setup. We're now starting to get some bearish price action. Remember, there's no reason at all to short this. You want to go long the LABU. We only want to use this when the biotech sector is going lower. And right now, the biotech sector is going higher. Well, it doesn't look like we're going to get a trade setup, but I just wanted to show you this is what you can do when you use LABD as a shorter term trading vehicle to get in and out based on chart setups. The LAB makes a fantastic short-term trading vehicle, but let's talk about the risks, because there are risks. These don't track perfectly with the underlying index. We talked earlier about how the company that runs this one, Direxion, they're attempting to match the 3x inverse return. And you can see there could be some differences. So for the month of March 2022, the biotech index went up 0.05%. So basically went nowhere. But you can see the LABD went down 12%. Well, where did that come from? It's called the return differential. So if we take a look, we've got the S&P Biotech Index on the top, and we've got the LABD at the bottom here. So you can see, okay, it tracks fairly closely, but when we really take a look at the differential, here are the numbers. There were only 3 months out of 12 where the LABD actually performed as good or better than the underlying. 9 out of the 12 months, it underperformed what it should have, and you can see March of 2022, a 12% differential. So you're not getting the exact movement, which makes these things a little bit more risky. And on top of those risks, we have to talk about the fees. There is an annual fee of just under 1% here on this. Every time you click this button, you're going to be paying these fees. It's just part of the game of ETFs. And sadly, no options benefit. And that's really the risk of these things. We at Maverick love options trading. We're an options trading firm. Our traders that trade for us, they have about 95% of their positions are options positions. But sadly, you cannot trade options on these. The reason is, yes, they're 3 times more volatile, but the options market knows that, so they simply make the options 3 times more expensive, negating any benefit. All options trading should be done on the 1x long biotech ETF, the IBB. You can buy calls, you can buy puts, you can do spreads. So everything should be done on that. That has the most volume and the tightest spreads. Buying a put on the IBB will be just the same thing as buying a call on the LABD. It's the same trade, but one's going to be more expensive to make. So make all of your options trades on the IBB. And lastly, hedging. Hedging is a fantastic way to use these. Let's jump into it. One of the best uses for the 3x leveraged inverse ETFs is for hedging. So for an example here, let's say that there is a trader or an investor that has $60,000 in biotech-like stocks. And they think the biotech sector is likely to be weak, but they don't want to sell their stocks, maybe for tax reasons or some other reason, but they just want to protect the money here. So what they do is they simply can go out and buy $20,000 as a hedge of the LABD. Now that is basically going to make it to where this portfolio is hedged. So let's say that their stocks go down 10%. As a bad month, stocks go down 10%. On the other side, they're going to make some of that gain back. Now look, we don't know if it's going to be a perfect match because their biotech stocks are going to be a different combination than what's in the LABD, but it's going to be very similar. So maybe the biotech stocks went down 10% and the hedge went up 8%. Maybe the hedge went up 12% and their biotech stocks did better. As you can see, this is finally a way for you to go in and say, I want to hedge out this part of my portfolio. Fantastic use. As you can see, there's some really great uses of these ETFs. But let's talk about the risks. These can be very, very risky for people that don't position size correctly. There are times that this ETF will lose 95% of its value. If the biotech index goes up 30%, you'll lose a huge amount. And if your position size is too large, that is going to be devastating. Always follow proper position sizing when you're trading these and respect them. They can hurt you. Thanks for joining me for the LABD Levered ETF series. Thank you very much. Goodbye.